for 11.2. We're on page 6, and we're starting by granting credit to Keller Associates for merchandise they returned to us. So we made a sale to Keller Associates. They're returning it to us for some reason, broken, damaged, wrong item. And so we're going to give them credit for that, plus the sales tax, and we are going to reverse what they owe us. Okay? And again, looking at your T's, this is our normal sales account. And then for sales, returns, and allowances, we're going to have this contra account. We're not going to reverse sales directly. We're going to do it with this extra account that, again, when you get to the financial statements, the income statement at the end, that is when that'll be calculated out, and it'll reduce your sales at that point. Okay? All right. So page 6. Okay, our first transaction, we are on June 4th. And it says we're granting credit to Keller Associates for merchandise returned. So we got to think about what our debit is. And this really shows it to you right here. We're going to use this account, and it shows you that the debit's coming from here. Okay? A normal balance for accounts receivable is a debit. Okay? And if we're reversing that, okay, they're not going to owe us as much anymore, then it's going to be the credit. So there's our credit, and here's our debit. And then sales tax payable, we have to include that. Normally, when we actually charge our customers, is going to be a credit, but when we're reversing it, it'll be a debit. So we're going to have a debit for sales returns and allowance. We're going to have a debit to reverse the sales tax payable, and we're going to have a credit to reverse the accounts receivable. Okay? All right. So our debit is sales returns and allowance, and you can use the R and A. Okay? It does tell us that this is a credit memo of 28. And again, it always will reference the original sale. This is the original sale invoice, 645. Okay, it's kind of extra information. What we need for this transaction is the credit memo. That's the documentation that we're returning, that we're giving them their money back. Okay? And the dollar amount of the actual merchandise is $245. Okay, the sales tax is $1470. Okay, and then the total of the accounts receivable is going to be here. So the sales returns and allowance is just about the product. So that's the $245. Okay, then our other debit is to reverse the sales tax payable, and that's $1470. Okay, and then our credit is going to be our accounts receivable / Keller Associates. Again, we've got to record it in both locations. So if we put a slash there, let's put a slash here, because we know we're going to have to post it twice. And that's for the total amount that it gave us. So $259.70. Okay, so these two added together will equal our credit. The two debits equal the one credit. Okay, so this is when a customer returns merchandise. That's what that transaction is going to look like. Okay, the next transaction is a mistake. And what has happened is that we figured out that a sale on account to Ashton and Lindsay was incorrectly charged to Abraham Corporation. So we just put it into the wrong account. When we did this, the sale was fine. Okay, sales is a sale. Didn't matter who it came from. So we recorded the sale part of it correctly in the sales column or the sales journal. And so that's okay. The problem is with these two companies. We've got to fix that. So our transaction is only going to include these two companies, and we're going to flip the amount that's owed from Abraham back to Ashton. Or vice versa. Let's see. Learn this now. Yeah, we've got to take off the accounts payable. Let me think through that for a second. Yeah, we got to remove it from Ashton and add it to Abraham. Okay, so normal balance of any accounts payable is a credit. So if we need to reverse it, right, for Ashton, it doesn't need to be in Ashton's account. We've got to debit Ashton and then go credit Abraham. Okay? So that's what that transaction's going to do. And this is on the 9th. Okay? So Ashton is the one that got charged and shouldn't have. Okay? And this is actually just a memo. Okay, and the dollar amount was $623. Okay, and it should have gotten charged to Abraham Corporation. Okay, and so now we're going to add it into them as their accounts payable. Okay, because this is normal balance for them. They're going to owe us more. They're not going to owe us as much because that was a mistake. Okay, so this is just recording, this is just correcting a mistake. We recorded in the wrong account. Okay, so we just corrected the mistake of recording in the wrong account. Okay, then our next one, we're going to give credit to Lambert Schools for damaged merchandise for $206. And remember, there's no sales tax because we didn't charge them sales tax to begin with because it was a school. They were tax exempt. Okay, so we don't have to worry about that tax line. So we're just going to give them the return and allowance. This is for the 12th. A sales return and allowance. And it's a credit memo 29. The dollar amount was $206. Okay, and again, it's an accounts receivable for Lambert Schools. We're not using the hyphen anymore because it's not its own account. This is two accounts. We'll post it 2 times. Give the slash here, so we can post it twice. Okay, and accounts receivable, they're not going to owe us as much anymore. Okay, we're giving the accounts receivable a credit. Okay, so for this one, it's a return without tax because it's a school, right? It was a tax exempt. All right, and then the last one on the 26th, this is another correction. We found that a sale on account to Keller was incorrectly charged to Carson. So Carson needs to get the credit. They don't owe us as much anymore. So if they don't owe us as much, we've got to credit them, and Keller does owe us. So we've got to debit Keller. So Keller will be our first account. And again, the sale was made, so we don't have to worry about the sale being incorrect or correct. It was fine. It's just these accounts receivable accounts that need to be corrected. Okay, and the total accounts receivable is correct, right? The total's correct. We don't have to worry about changing accounts receivable either. It's just these subledgers that we're having to correct. So this is memo 62, 598. And then Carson is the one that is getting credit. For 598. Okay, so this is only affecting the subledgers. It's not affecting the controlling accounts at all. And again, this is just another correction, just like that one. Okay. All right. So we are going to post. We're going to post all of these individually. Again, pretty much everything in a general journal, general column is individual posting. Okay. And just to make a note here, a sales return and allowance is when a customer returns merchandise you also need to remember to adjust sales tax payable. Okay, and this is a contra to sales. So we'll just take a look at those T's again. Okay, so normal balance for sales is a credit. This is a contra. That means it's going to be opposite. Okay, and then just to remind you here, don't forget the sales tax payable has to be reversed as well. Okay, so for this transaction, we're increasing on this side, and I don't want to, it's not the normal balance side, okay? This is, but we have to decrease it, right? So these are my two debits, and this is my credit. We'll do it that way. Okay. And again, just remember anything in general is posted individually. All right, there, that finishes 11-2.